What's going on YouTube? I'm Evan, this is Marksman Trading, and welcome to this day trade recap. Today actually is a pretty small green day. We're up only $3.11 and no trades in the prop firm eval account on futures. So yeah, only up about 0.31 R. Today we actually tried scaling and scaling out some more. I told you guys last week, I'm trying to get into more of that with my edge. My mentor is saying it might work better, and I'm really trying my best to scale on trades that are working well and just take starters and losses. So last Friday we had a starter on Microsoft and Apple, both of which failed. But as you can see, I was only down $3.50. So it's nice, taking smaller losses. But today on the flip side, I'm only up $3.11 because I only took starters on both trades as well. So we only traded Apple. We took two trades. We took a double top and we took a higher low. And I'm going to explain my thought process behind it and what I should have done better, and kind of just my thoughts with the entire trading day. So here we have Apple, and the first trade I took was this double top up here against pre-market highs. So pre-market highs, I'm just gonna mark that out again real quick, was up here at like 40, I'm pretty sure. Let me just mark that, just so you guys can visualize a little better. So as you guys know, I need to trade off of a key level. I need to see a supply line, which is red dashed line, and I need to see price action agree. And so this trade right here was a double top exhaustion kind of play. And so usually this is how it lined up with my edge, right? We have a 1 minute supply line, we have the key level pre-market high, we have a 2 minute supply line up here, we have, I think that was about it. But look at this, it's a clean double top, right? And it's also an exhaustion play because we ripped right up, kind of V-shaped, right into the right into the high of day, which is also open on Apple. So very little pullbacks. So buyers definitely would get exhausted out up here. You can see kind of like the ending volume kind of come in a bit right before we get flushed right back down. So I was looking for confirmation to go short, which is how I usually trade, right? With my edge, I look for generally or usually a engulfing candle. And I take like the pullback into like some EMA or some pullback after the engulfing candle that confirms it's like moving in my direction. And so today I made the mistake of just taking a starter after a confirmation entry. So my mentor was telling me to take starters on anticipation, but take full size on confirmation. And the problem I have with that is my edge is basically only based on one-shot trades, and I always thought I was trading after confirmation. So when I get off of engulfing candles like this, and I believe it to be confirmation, today I took that with a starter because I'm trying to just trade starter size and scale into it. But in reality, this is already confirmation. So let's say I was shorting with the front side of this move as it was coming up into this double top, anticipating it to fail there. I should have taken starters there, and then I could have scaled in or taken a full size where I actually scaled in here. If that kind of makes sense, I hope that makes sense. I'm still trying to learning, the whole process. I got short one share because that was my starter size, or actually I should have taken two, but I accidentally took one at 76. So kind of, I meant to short it like right at the open of the candle, but I didn't quite get filled. I got filled a bit low, but I still took it for 1R. No, for the trade, I took it for 1R down to VWAP at 187.09. My stop loss is above pre-market high at 188.41. So yeah, so my thought process was I'm going to scale in on lower highs against this level right here, and I'll fade it back down into VWAP. But like I said, this flush candle was definitely confirmation, especially after engulfed these bottoming tails, this green engulfing candle. That was just more than enough information to know that I'm on the right side now. I could have taken a full size entry, so I think it was like 15 shares, same stop loss, didn't have to move the stop loss, and I could have rode that down for a solid 1R trade, making $10, and maybe even left a runner on to trail down toward the lower end of this range. So kind of lesson learned. Also an exhaustion move. So I think I've said it before, the market's like a rubber band. When it kind of stretches, it's gonna snap back fast, and so it's not like it grinded up. And I feel like if it grinded up, I can expect, double top, lower high, kind of move back down. But the price action is fast and is violent. And so it shot up and it's going to snap back fast. And so I shouldn't have been looking to scale on lower high pops because, like, theoretically, it shouldn't give those because of the kind of move it has, right? So buyers get exhausted out after they kind of like buy, no pullbacks really, no like consolidation. And then it kind of just tries to break out high of day. Nice topping tail, flush right back down, and then they're on the wrong side of the move. So yeah, this should have been like a one-shot trade instead of a scale-in trade here. At least where I took the entry, that should have been 15 shares instead of just one. Secondly, the second trade I took was on this higher low right here. So we have previous day's close from a key level, holding this higher low from these kind of wicks you can see over here, this level at 186.25-ish. So we had a 1 minute demand line, we had a 2 minute demand line, we had a 5 minute demand line. Let me quickly put these arrows so I can visualize that for you real quick. So I had two scales on this, 3 shares down here at around like 30, and then 3 shares up here at 186.50. So I think I took a good first scale and entry here, a good starter position. So we had a higher low kind of forming, the key level, we had the demand lines. We consolidated for a while, had a green engulfing candle, and I got in on the pullback, retesting the 9 EMA after closed back above it. And so that was a solid first entry. 3 shares, stop loss to low of day. I think full size was, it may have been 15.2, something like that. And so then it moved up higher and then consolidated, and this kind of confirmed my higher low thesis. So I scaled in another 3 right here. You can see that like the 9 EMA, 20 EMA are getting crossed over. We have some bottoming tails kind of holding this higher low right here as well compared to that one. And then I got in right there, right before the pop candle at 10:54, or before it popped up. And so I didn't raise my stop loss though. I kept the same stop loss. Like I said, I'm still experimenting, trying to just figure this process out. It's just kind of, I'm going to learn only by just practicing and just doing it. So I think here I should have scaled in more, right? Because I want to scale in once I know I'm right in the trade, once there's confirmation. And I think this is the confirmation. So like I said, how this flush candle is confirmation for this trade to go full size. I think this right here is confirmation. That consolidation is confirmation to scale in full size. So instead of just taking another 3 shares, I should have taken like another 12. And then I could have raised my stop loss, or I could have kept my stop loss there if I wanted to. Because I think that 12 extra shares would be measured or calculated based off of risk to there. Or if I wanted to even take more shares, I could have raised my stop loss, maybe even taken like 18 or something like that. 18 extra, because I believe I had a 41 average, taking 3 there and 3 there. But if I were to scale in more up here as it's moving in my favor, then I could have raised my stop loss, because that way, if this gets invalidated, then therefore it would not be a higher low, because it already moved up and it would fail just lower. And then I would look for a double bottom or something like that. So yeah, I could have raised my stop loss, scaled them to full size here once I'm right on the confirmation, and then I could have rode this higher. I scaled up partially here up at 186.81, and then I used a 1 minute bar by bar. Actually, no, I'm sorry. I think I had a couple scale outs right here, but I think this one showed the average of 5 shares, because I scaled out in the same 1056 candle. I think I scaled out down here at 77. I want to say it was up here towards VWAP as well. I scaled out 2 there. So I had 1 share left, used a 1 minute bar by bar, exited the last one at 11 o'clock. Honestly, I should have just taken it into VWAP, because, just the path of least resistance. Just taking it all the way up here at like 99 or 187 was a whole dollar number. So of course it's going to reject there. Or I could have taken it trailing the 9 EMA in the 1 minute. If it closes below that, I could get out, because as you can see, it didn't do that all the way up until 11:22. So that would be a significant amount more of profit. But like I said, it's only like 6 shares, so still not much. But I just got to practice and, scaling in when I know I'm right in the trade. So anticipation, starter, or something like this, it's still in a downtrend, but we broke this downwards trend line. We held this higher low, and now we're consolidating with bottoming tails. I think the market was moving back up. EMA crossover, so a lot of people are looking to buy here. Yeah, so it was just a clean trade. So I should have scaled in full size here, could have raised my stop loss, or I was thinking I could turn this into a risk-free trade. So technically I only made 0.7R on this, because I kept my stop loss down here when I had 6 shares at average of like 186.41. So I was risking, how much was I risking? I was risking a total of $3.48, and I made $2.44 scaling out into this. But if I would have raised my stop loss, obviously I would have risked less, because it would be 6 shares risking to, like 186, like 11. But I could have turned it into a risk-free trade with just upwards potential if I were to scale in. So actually it was a perfect scale in if I wanted a risk-free trade, because I scaled in at 186.41 average between these 2 scale-ins. Therefore, that means if I were to raise my stop loss to break even to 186.41, it would be just a break-even trade, right? And that would be up here. And that would actually be right below this pivot at 186.41. So if I were to raise my stop loss to there, that would be, I'd get some profits from there, and I'd take a small loss from there, making it break even. but it would also be a good technical spot to stop out. I feel like if I'm really looking for a solid scalp play, because it's below this pivot, below the EMAs, it can roll back down if it kind of breaks that. And so yeah, then it would have been, at most I'd be risking is just the 3 shares from the initial entry minus the stop loss. So that would have been like $1.50, something like that. And then I would have made $2.44, risking at most in the trade $1.50. So I think that's pyramiding. I want to say that's pyramiding. I could be wrong, but I'm gonna look into that. But I'm pretty sure it's like pyramiding form of scaling in. So scaling in normally would just be raising the stop loss, adding into it. But I think pyramiding is when you're also raising your stop loss to cover profits from the initial entry, allowing for pullbacks, hoping it's not going to pull back from your second entry to like a break-even stop loss. If that kind of makes sense. I'm kind of like rambling a little bit because this is still new to me. Like I said, I'm still learning. It's gonna take a while. My my mentor said, I think it took him like 50 to 200 trades to I think it was like 50 to 100 trades to really kind of somewhat grasp scaling in and scaling out, because he used to be a one-shot trader like me, and then around like 200 trades to really kind of like perfect it. And so I feel like I learned a lot today, right? Like I feel like I need to only scale in completely when there's confirmation, and so I just need to learn what confirmation looks like on a per trade basis. So here it's the flush candle that holds below pre-market high. And one more thing with that trade, only reason why I was shorting into the top end of a demand zone or supply zone is because I really wasn't respecting it too much today. So I wasn't really paying attention to the level too much, because that's like a rule. I don't want to do that, but it wasn't really respecting it. So that's why I was able to short into the top end of that. Yeah, lastly, I just want to show you guys an example on Microsoft and AMD. So Microsoft had a similar setup to AMD, and that's a demand break and retest. You see this demand right down here. It comes down, breaks it, and then comes back and retests it for kind of like a trend join short, right? I think it pulls into the 9 EMA on the 5 minute. Yeah, right there. That's like a perfect sell setup from like live trader videos. So people looking to short it off the 5 minute are probably shorting right there. It's a break and retest setup as well. And so I probably would have entered around there, knowing my edge, after a flush candle holds it at 10:39, risking to the high of the pivot. And I missed this trade by like a couple minutes. I saw it just too late. I think I saw it at like 10:40 or something like that. That was a clean trade. So I want to compare this or contrast this to AMD. AMD had a similar setup, as you can see. AMD also had a break of demand zone and a retest of it. Did Microsoft retest previous day's low as well? Or was that just a demand zone? Okay, yeah, just a demand zone. So, yeah, so as you can see, they look pretty similar, like right off the bat, right? Both moving down, both broke a demand zone, are retesting it. This is even retesting previous day's low. They both had a 1 minute supply. They both retested the 9 EMA and the 5 minute. And so to me, I was watching this later because I missed the Microsoft trade. And so I was hoping, I could take this kind of bear flag setup, break and retest. But I didn't. And well, for my main reason for not taking it was the bottoming tails. I never really had a solid flush that held below this level. But I was reviewing, these trades later, and like, what made these different? Why did the Microsoft trade work, and why didn't the AMD trade work? Because as you can see, we just hit the lows, and if we would have tried shorting it there, we've gotten stopped out right away. And it actually went all the way back up to VWAP. There's a few things I noticed that I want to share with you guys. So first off, I was looking at ATR. I don't use ATR too much, but I should, especially after what I saw today. And so AMD has an ATR of about 7.24, and Microsoft has an ATR about 7. So let's just go with 7 just to simplify it. And so, so Microsoft opened at, what is that? Opened at 409.50s roughly. So a 7 ATR move to the downside, that'd be like 402.50s. So when we took this break and retest, even to the lows, 405, we still had like 2.5 points, I think, if that math is correct. 2.5 points of room to the potentially to the downside that Microsoft could give. And that's, from up here from 407, that's even more points if you take it all the way up here. So Microsoft had a lot of room to the downside with its ATR, average trading range, or true range, or whatever it is. And so AMD had an ATR of 7 as well, and that opened up at 170. What is that? 179 basically. And so subtracting 7, 172 is like the lower end of its trading range of its ATR. And so we actually, before that break and retest, we actually hit that all the way down here at like 172. And so I think the reason why this trade didn't work is one, because the ATR was already met on my AMD. So unless there's a high RVol day, like if it's experiencing more volume and it's like more aggressive to the downside, why should we expect in a continuation play when it's already kind of traded its average range? Like, we shouldn't, right? I think we should actually be looking for a reversal trade, only if price action agrees, but be looking for a reversal trade, because it should, technically speaking, bounce around there, because it doesn't really trade past like 7 points. So I think that's one reason why AMD didn't work and Microsoft did, because AMD didn't have any more room to go down based on its average trading range, while Microsoft still did. And secondly, you can kind of see this volume come in here on this flush. That's kind of almost ending volume, right? Sellers are trying to kind of pile in. Buyers are probably trying to step up too. Eventually, this green engulfing candle, 1048, that looks pretty bullish. We have like bottoming tails on these higher lows. Yeah, it just couldn't really stay heavy. Even though it looked similar, it couldn't really stay heavy. So yeah, that's just a quick lesson I learned today on just ATR. Also, it's a good lesson in why you should have a general edge, right? You should have a general edge and know your setups in your playbook, but you also need to tweak your edge. Little specific things like this that really make or break your setups. So even though these look similar, and to like a new trader like myself, well, I'm kind of not really new, but to an inexperienced or unprofitable trader like myself, where I'm like, oh, these are both bear flags. Knowing these differences in like ATR, ending volume, engulfing candles, bottoming tails, and like higher lows, these are the little things that really, set apart these trades, even though they have like the same setup. So yeah, that's about it. That's like the lesson I learned today. Thought I'd share it with you guys. Yeah, hope you guys enjoyed the video. Be sure to comment, like, subscribe. Let me know if you guys got any questions about my edge or anything like that. This past weekend, I had like my first kind of like burst in like traction to my channel, which that was pretty exciting. I think I got like 6 or 5 subscribers just over the weekend, so that was pretty cool. Some videos hit like 200 views, not the shorts, like the big videos, like the main content. So that was pretty exciting. So just thank you guys for watching. That was pretty cool to see. But yeah, I'll catch you guys in the next video. God bless.